Take a look at this chart. On the left, Apple reports fiscal third-quarter earnings that beat expectations across the board. But look at what follows. Despite that growth, the stock plummeted nearly 9%, wiping out $500 billion in market value in a single session. This is the sell the news paradox. Apple's fundamentals are healthy, yet the stock is being treated as a liability. The crash is being driven by automated algorithmic triggers and a retail herd reacting to momentum rather than value. If this were purely about the numbers, Apple would be surging. But when even a perfect earnings report triggers a $500 billion sell-off, it proves that the market is ignoring the balance sheet in favor of something else. To find the logic in this chaos, we need to look beyond traditional financial metrics. In his book, The 8 Positivity Strategies, Dr. Goe argues that solving a crisis like this requires 3 distinct perspectives. The king, who reads macro timing, the general, who maneuvers through the terrain, and the scientist, who relies on mathematical logic. By layering ancient strategy over modern data, we can see the signals the algorithms are actually following. We stop being victims of the panic and start observing the specific points where the herd will break. We begin with the king. In Dr. Ye's framework, the king uses the I Ching to determine the cosmic weather, the overarching timing of a crisis that dictates when to act and when to wait. The king identifies this market state as a combination of hexagram 5, calculated waiting, and hexagram 64, the end in sight. The instruction is to avoid the muddy river of the initial sell-off. The I Ching warns of an anxious young fox who gets his tail wet just before completing his crossing. If you jumped in while the retail panic is at its peak, you're merely adding your own capital to the flood. The first step to a recovery is patience. We hold our ground and wait for the great waters, the massive block trades from institutional buyers, to step in and stabilize the price floor. Once the timing is set, we turn to the general. The general uses Sun Tzu's art of war to navigate the active terrain of the sell-off without being consumed by it. Sun Tzu's core rule for this scenario is to win first and then go to war. This means we don't try to stop the downward trend. We wait for the panicked sellers to exhaust their own supply of shares. While the retail herd retreats in fear, the strategist uses that confusion as cover. We quietly accumulate high-quality assets at the very moment the market's resistance has broken. By refusing to fight the momentum head-on, the general extracts value from the panic. We aren't participating in a destructive conflict. We are simply occupying the territory the herd has abandoned. Finally, we consult the scientist. The scientist strips away the philosophy to look at the cold mathematical bones of human interaction. This is a classic prisoner's dilemma. By giving in to fear and selling simultaneously, retail investors mathematically guarantee their own mutual loss, driving the price lower than the facts justify. We break this trap by executing a staged pyramid entry. Instead of buying all at once, we buy in smaller increments as the price drops. This mathematically lowers our average cost, allowing us to build a dominant position while the others are locked in a cycle of panic. What was an emotionally terrifying crash becomes a predictable mechanism. You aren't gambling on a recovery, you are exploiting a mathematical certainty of the game. Eventually, the technical support levels hold and the retail panic clears. Institutional money floods back in to absorb the remaining supply, and the price begins its inevitable climb back towards its actual value. By combining these 3 strategies, the investor engineers a transition. We move from the tension of calculated waiting into the peak states of increase and abundance. The result is alpha, the capture of a pricing anomaly that the rest of the market missed because they were too busy reacting to the noise. Whether you are trading a $62 trillion market or leading an organization, mastering complex problems requires the same fundamental discipline, the ability to harmonize your internal strategy with external chaos.